Hey guys, it is Julie here with JT Wealth. In today's video, we are taking a look at two different companies that no one seems to be discussing, but could both have a lot of great potential growth in their future. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are discussing two different stocks that I haven't really seen anybody talking about. However, they do have strong buy rating from analysts, and both stocks have over 50% upside potential from 5-star analysts. So in today's video, we're going to take a look at these two companies, what they do, and what those future projections are. And just before we get into all of that, this is just your friendly reminder that if you enjoy today's video, make sure you hit that like button and leave your thoughts in the comments down below. Also, don't forget to check out some of the links in our description. This includes a link to our Patreon page, which will get you into our Discord chat group where we can chat it up about stocks and investing. So make sure to check it out. All right, now the first company that I'd like to bring to your attention is Alteryx. They trade under the ticker AYX and are currently just shy of $114 per share. Now, this stock has taken a couple of hits this year, starting out with a dip back in the pandemic, and then a couple disappointing quarterly reviews, along with some cautious forwardly outlooks from their management team. Now, Alteryx provides an end-to-end platform that helps enable data-driven decision-making. Alteryx is a leader in the analytic process automation, or APA, and its APA platform unifies analytics, data science, and business process automation in one end-to-end platform to accelerate digital transformation. So they facilitate disparate data access, analytics, and data science via a code-free and code-friendly platform. They automate the entire analytic and process pipelines in the context of the desired business outcome, and they empower citizen data scientists to become self-service digital workers. With their technology, users experience limitless outcomes, and it's currently being used for multiple uses such as shipping optimization, customer targeting, sports analytics, and automated audit. At the core of their technology is Alteryx Designer, which makes it easy for analysts to produce analytic workflows, meaning the input and preparation of data, the training and scoring of models, and the output of the results for presentation. What makes Designer special is how easy it is to use. It is code-free and code-friendly, so it has an intuitive drag-and-drop interface for both code-free analytic modeling as well as code-friendly advanced modeling, so analysts do not lose any flexibility because they can integrate their own R or Python code if they prefer. They are flexible and diverse, and they say you can start with what you need and expand over time with their open platform. Plus, they say while there are many modeling tools on the market, they do both kick-ass modeling and model deployment, so put your analytic models to work. Alteryx says that there is a high-growth market opportunity of about $49 billion between IT and line of business. But they do already boast a global customer base with over 7,000 customers across diverse industries. This includes Walgreens, Campbell's, TELUS, Netflix, even Chevron and Hallmark, so a very diverse customer base. For their financial highlights, we do see a dip in quarterly revenue at the beginning of 2020, as to be expected with a lot of companies this year during the pandemic, but we are seeing a recovery, and we do have 25% Q3 2020 revenue growth, 93% Q3 2020 non-GAAP gross margins, and 124% dollar-based net expansion rate. Plus, their annual recurring revenue has grown 38% year over year. Now, there have been a few changes this year as far as the higher up personnel goes, as Alteryx has introduced a new CEO. And that would be Mark Anderson. Now, he's been on Alteryx's board of directors for the past 2 years and held top executive roles in fast-growing tech companies his entire career. His notable leadership roles include Executive Vice President of Sales at F5 Networks and President at Palo Alto Networks. Now, the CEO isn't wasting any time executing his vision for a new organization. He also announced Matthew Stovall as his chief customer office, who worked with him at Palo Alto. This sense of urgency and customer focus should be welcomed by investors. With its low bar revenue guidance for the upcoming quarter, Alteryx is likely to exceed these projections, and it should be the first of many exciting quarters to come for this tech company under new management. Hearing from Alger Small Cap Focus Fund, who holds Alteryx shares, they said that shares of Alteryx underperformed because the pandemic continued to negatively impact sales cycles for the company, with some customers postponing or downsizing data analytics initiatives. We view these headwinds as transitory and note that Alteryx has quickly adapted its go-to-market strategy to better engage these budget-conscious customers through greater usage of short-term licenses. Longer term, we believe that the pandemic is a tailwind for Alteryx as companies realize the need for better data and analytic capabilities to adapt to dynamic business environments. In the latest news, Alteryx did cut their 2020 recurring revenue guidance, but one analyst still sees plenty of potential upside. Now, this news caused a dip after the analytic automation process company lowered their annual recurring revenue guidance for 2020. This news overshadowed the company's improved outlook for total revenue. The company now expects 2020 ARR between 492 to 495 million, reflecting an increase of 32 to 33% year over year, where they had previously predicted over 500 million. For the full year of 2020, it estimates total revenue to grow 17 to 18%. And they're scheduled to announce their Q4 and full year results on February 9th. Additionally, the company announced the appointment of Dean Darwin as its Chief Revenue Officer, succeeding Scott Jones, who's leaving the company to pursue outside opportunities. In reaction to the latest updates, Oppenheimer analyst Ittai Kidron reiterated a buy rating with a price target of $180 and commented, "We're not surprised by the CRO transition given the timing and the opportunity for new CEO Mark Anderson to bring his own team. We believe Darwin has the right experience to partner with Mark and evolve Alteryx sales organization to a platform-based company." Now, currently there are 9 ratings on the AYX stock, and it comes in as a strong buy with 7 buy ratings and 2 holds. The average price target is about $166 per share for just shy of a 48% potential upside over the next 12 months. Taking a look at what analysts have ratings on this stock, you'll see that many of them are 5-star rated, with some of the most recent ratings in the last couple days all ranging between 35 to 60% potential upside, and the highest end being $213 for almost a 90% potential upside. So the next year could show some promising growth for the Alteryx stock. Now, the second company I'll be bringing to your attention is Rackspace Technology. They trade under the ticker RXT and actually just came public this August. Currently, they are trading at $19.12 per share. Rackspace is an end-to-end multi-cloud technology service company. They are a cloud services provider that helps companies port data to Amazon Web Services and also provides infrastructure management and managed application services. So their primary business comes from developing cloud solutions for clients utilizing third-party cloud platforms like AWS, Microsoft Azure, and Google Cloud. As a cloud solutions provider, they basically resell some of those cloud solutions, but then their big value to customers is that they provide value-added services that those companies can't do themselves. Now, the multi-cloud ecosystem is a large and growing market, with over 81% of cloud users working with multiple providers, and it is a $400+ billion addressable market. For their last 12 months ending Q3 2020, they've had $2.6 billion in revenue and $752 million in pro forma adjusted EBITDA. They also have 95% in recurring revenues. And their bookings are growing, with 64% year-over-year growth driven by broad-based sales execution, which is their 5th straight record sales quarter. And you can see that reflected in the bookings here when comparing 2018 at about $600 million to the last 12 months in Q3 2020 at $1.1 billion in bookings. And they have recently updated their guidance for their full year of 2020, with their core revenue growth now expected to be between 14 to 15%, adjusted EBITDA between 758 to 762 million, and their adjusted earnings per share between 79 to 81 cents per share. And a lot of this successful execution is thanks to their new management team that came in Q2 of 2019, seeing a steady growth in their total bookings growth and their core segment revenue growth. At this time, there are 5 analysts with current ratings on the RXT stock, and it comes in as a strong buy with unanimous 5 buy ratings. The average price target is $28 per share for about a 45% potential upside over the next year. And as far as the analyst rating the Rackspace technology stock, they all have pretty good ratings themselves, with 5 stars across the board. The most recent rating came from RBC Capital at $29 for just over a 50% upside, and on the high end, we have a $33 price target from Goldman Sachs for over a 71% potential upside. So there we have 2 companies that don't seem to be getting much buzz, but that analysts all seem to agree have some pretty impressive potential upside over this next 12 months. Now, I feel like I should reiterate that last bit. Those ratings are 12-month price targets, so these are not expected to just jump up overnight, but could provide some steady growth over this next year. Of course, these videos are never a suggestion to buy or sell any specific stock, nor should you just take the word of those analysts. Any investment decision should always be made based on your own research and due diligence. I always love hearing from you guys, so make sure to leave your thoughts in the comments down below on what you think on these 2 stocks, or what other ones you think are maybe flying under the radar that also have some great growth potential. If you made it all the way to the end of this video, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and cheers.